You know, just recently met with a trader, and I meet with them all the time, and it's happened to me a bunch of times. And we're talking about getting back from a really bad day, recovering from a really bad day in the marketplace, where, I have this customer who makes $1,000, $1,500 a day, 5, 6, 7, 8, 9 days in a row. The guy's a great trader. And then he trades the after hours one night, and he loses $9,000. The next day, he's not the same trader that he was for day 1, 2, 3, 4, 5, 6, 7. He's the trader from last night trying to make back that $9,000. That's not the way it works. He has to work for 9 days to get that back. You made the mistake. You traded a stock that you had no idea about. You bought a stock that was down $12 and you bought 1,000, and then it was down $13, you bought another 1,000, then it was down 20, and you realized you were completely wrong. And you sell it and you lose $9,000. It happens to all of us. Go back to basics. Go back to 100
Okay, guys, I see that.
Even a $100 drop the next day is a winning day. If you start shooting for the fences.
I'd really like you guys to see this video. So what I suggest you do is, if you send me an email, guys, I will send it out to you. Just drop me an email. It's very important, actually. My email. Yeah, no problem, Gordon. I'm just going to send it out to you. If you guys just drop me an email, fo'connor@tradersedgeforex.com. fo'connor@tradersedgeforex.com. Please drop me a quick email. I will send you the video, the link, straight out to everybody. What he's talking about is, if you have a bad day, and believe me, everybody, there are no exceptions to this. Everybody will have a tough day in this market, particularly in this market. What do you do? How do you recover? And the only way you can recover is to go back to basics, like he's talking about. Will do, Harry. I'll send it to you for sure. Go back to basics. Start small. Just like we talked about all along. Look for singles. Forget about home runs. Get back your groove. Remember, the people who stay in this market for a long time look for singles. They get consistent 10, 15, 20 pips a day. We've talked about that before. And then let your compounding and your leverage go to work on your behalf. That's how professional long-term traders do it. Just know that you and I are no different if we want to stay in this game for a long time. And be accountable, guys. Please, please, please be accountable for your own trades. If you make a mistake, it's okay, but take responsibility. Go back, take a look at the chart, and see, it's just something I could have done differently. Sometimes it's going to happen where you took it with the indicator and it just didn't work out, and that's okay. But at least look at it and see that that was the scenario. If there was anything that you have done that you could have done differently, don't be afraid to admit it and say, hey, you know what? I didn't see it. I made a mistake. I'm going to bring it up with my coach or my mentor, and I'm going to walk through this. This game is a tough game. You've heard me talk a lot, guys, about reading Trading in the Zone. And seriously, if you have not read this book, Trading in the Zone, stop everything that you've ever done in Forex. Do not do another thing until you've read that book from cover to cover. It is the Bible of trading any of the markets, particularly the Forex market. It's written by a guy called that should be Mark Douglas, actually, not Michael Douglas. And I didn't see that before. A guy called Mark Douglas, very, very smart and really, really good trader. The information in there is invaluable, and it's what's going to make you from, a guy who's sitting on his computer maybe 1 hour, a couple of hours a week, trying to have fun with the Forex market, making a few extra dollars, into a professional or semi-professional trader, which I believe is the goal that many of you guys want to be there. Do we have all the answers? Absolutely not. I continue trying to learn myself every single day. I spend time learning. I never think for 1 second that I got this thing down, because you don't. The moment you do that, you're in trouble for any of us. So again, on the video, fo'connor@tradersedgeforex.com, and I will send you out that video link. No problem, guys. Sorry about that. I tried, but didn't have the right technology to do it. Back to the task at hand. Let's go out and do our drill down. And if you're new, Please pay attention to what I'm about to do. Yeah, Harry's just saying that personal responsibility is very important. Could not agree more, Harry. It sure is. How can I learn? How can I learn from my mistakes if I don't take accountability? You know, I know that I have 5 kids. I went through the teenage years 5 times, and my biggest lesson with my teenagers was, guys, please take responsibility for your actions, because that way we can change them. And if you've done something and it wasn't your fault, then it wasn't your fault. So be it. That's okay. Drill down. Always do the following, guys. Go out to the daily chart. Please, always start at the daily chart. And a couple of things you'll see immediately on the daily chart. These are lines that we drew before, guys. Trend lines that are still intact. Look at what that currency is doing. It's back and forth within our trend lines. Has not breached those trend lines. The problem is that these, from top to bottom, moves are dramatic. That first one down is 900 pips. Next leg up, 700. Next leg down, 600. Next leg up, 500. Next leg down, 800. Next leg up, 700. So you see what I'm talking about. But it's still within that channel. That's the important thing. And if you don't go out to the daily chart, you will not see that, guys. So please do that. The other thing that you'll garnish immediately from the daily chart is major support and resistance lines. So the first thing I want to do is draw our Fibonacci. Looking at the chart from left to right, I want to see the most recent trend, the most obvious and recent trend. And this is it right here. Here's the bottom. There's the top. I take the Fibonacci tool, put it on the bottom, spread it up to the top, and see, is there anything I can garnish from that? And immediately there is. And that is that this level, this 23.6 level on the Fibonacci, has been in play for months now. The currency is playing around back and forth across that 23 Fibonacci, and it's been support and resistance on many areas across those since March of this year. Now, if I look to the left, and our golden rule in Forex trading, particularly with charting, is always look to the left. If I look over here to my left, bingo, previous resistance level, right here, previous resistance level, right here, previous support level. All of that information is available right in front of me on the daily chart. Now what I want to do, because that's a major level, I want to mark that area with a red line, and then I can remove, well, I want to do one other line, and that's down here in the bottom, because I have support coming in again here at this second level. Now I'm going to lose my daily chart. Why would I do that? Because I don't want too many lines and instruments on my chart. I want to keep the chart as clean as I can. Now I've left my daily trend lines on there. I've left my 23 and 38 fib, major support and resistance levels on there. I've left my uptrend. Now if any of those lines show up on the lower time frames as I'm going down those time frames, I really need to pay attention, because those are big levels coming at us from the daily chart. Now the next thing I do is I drop to the 1 hour chart. And look at the 1 hour chart for a moment. Actually, before I leave the daily, let me show you one other thing. If you take a look at the last 8 to 10, 12, 2 weeks actually of trading, we're actually in a very tight range here. Stuck right on the Rubicon Indicator. Now there's one other thing that I notice. The price action back here on the 11th of July broke the spine for the first time since January. It broke short. However, the railroad tracks did not follow through. That would have been marked right about here for a break of that level to trade short on the daily chart. That never happened, so that trade was actually never called. Let me get rid of that line. So that's your first clue, that the move down was not strong enough to sustain the break of our spine. The next clue is look at this whipsaw action across the daily chart. Back and forth, complete indecision. In other words, the market saying, you know, from here to here, Is the euro weaker or is the dollar weaker? Some days we think it's the euro, some days we think it's the dollar. And again, if you've been watching the news, that's not a surprise because it's going back and forth between Europe and the United States as to which economy is in worse shape, right? And that's what we're seeing on our chart. The other thing to notice is that even though this looks like a very tight range, look at these candles. We're talking 300 and 400 pip candles in one day. That is not our norm. We go back in time to a more sane, last year. Look at these candles here. These are all daily candles. 100, 190, 120, 90, 90, small 100 pip candles, 100 to 120 pip, normal range. What are we in right now? 300 and 400 pips a day. Astronomical. Remember, most of that, again, guys, has been driven by government interventions. Japan intervened to the tune last week of 2 trillion yen. The Swiss are buying up as fast as they can. America intervened. Bond buying in Spain, Italy. All of that impacting our market. So just know that. Now, if I drop to the 1 hour, that whipsaw action that I talked about, now we see it as we drop down. Look at our spine and look at that 23 fib. Back and forth, back and forth, back and forth. Now, does that mean it's untradeable? No, there are some very nice trades in there. But that's difficult. The problem is, let me go to want to do 2 things before I show you the trades. We're on a 1 hour chart. We got to read that chart from left to right, look for the prevailing trend, and get our Fibonacci on there. I want to see at least 2 weeks of trading. Squeeze it just a little bit more. And there we go. So we'll take our top to our bottom, the most recent, significant, visible trend. Blow it back out. We put that on over a 2-week period. Now we can leave that fib on. Now we drop to our trading window, the 30-minute. And let's take a look. This is all to be done before we contemplate taking a trade. And remember what I said, are there any lines showing up from the daily chart? Look at this baby. That's our 23 fib in play today, literally right now, off the daily chart. And look at the action today. Was held at the 50% Fibonacci. Actually really held at the 38. It spiked up to the 50. And that 38 fib has been in play all day. You could have been bouncing off that. And what was happening was, it was bouncing off our spine. Now let's put on our Rubicon Indicator, the professional version. Now some of you guys who are students will have exactly what you're seeing here. The only difference with this and the professional version is that it will show you the actual potential entry points with stop losses and take profits. And here's the most recent trade. Let's look at it a little bit earlier. Today. Or actually yesterday when it broke, 10th of August. And the time there. I was looking for the up move. I did it too soon. But anyway, you get my point. There's the trading. Now, here's where it gets dangerous. Is this whipsaw action that I was talking about? Well, these are okay. This trade never hits. You could have just been taken into this trade and then immediately whipsaws back 60 pips and takes you out. That's what I mean, guys, by the whipsaw action. Now, once it breaks free and we get a good break over the spine up here,